Bill, I think we're ready to go.
Ready to go. Awesome. Thank you. Well, good afternoon and welcome to the May 2022 AFO BMG meeting, the last meeting of the fiscal year. Even though it is raining outside here in Chicago, what has been really nice recently is seeing all of the graduates on campus taking pictures with all the UIC signs and taking pictures at their colleges. And I'm sure it's much the same in Springfield. So it's really nice to see life getting back to normal. We can advance the slide, please. So just a few housekeeping items. You have all been placed on mute. So the way you can communicate with us is that you can type your questions into the chat box. Please keep in mind those chat questions go to everyone. We have a team that is reviewing the questions as they come in, and we will try to get to them all. But if time constrains us, or if you have a question that comes to you later in the meeting, we will look at those questions after the meeting ends and be sure to answer them as well. If you have additional questions, there'll be a link to the meeting video sent out so you can reach out to the presenters as you feel the need arises. Certainly, also always feel free to reach out to my staff or myself whenever you have a question, comment, or idea. Ginger, Bernadette, and Stacy are there to serve you and assist in resolving your issues. You will find our contact information on the last slide of the presentation so that you can reference it at any time. If we could go to the next slide. So we do have a very packed agenda. I know everyone says that at the beginning of every meeting, but we do have a very packed agenda. We're going to jump right into the presentations. I am going to mention that as a 2-minute warning at the end of it, in the chat, we'll put a 2-minute warning for the presenters. So watch that chat because we do want to be considerate of the presenters later in the presentation, making sure they have their designated time. And with that, we'll just jump right into it. The first presenter we will hear from is Ann Larimore from University Accounting and Financial Reporting with a GASB 84 custodial fund update. Please take it away, Ann. Thank you.
Thank you, Bill. Can everyone see my screen, hopefully?
Yes.
Okay. A little bit. Okay, so good afternoon, everyone. I am Ann Larimore from University Accounting and Financial Reporting. I'm here to give you all a quick update on GASB 84 and how it affects custodial funds. I'm going to try to make this quick, as I know it is a packed agenda, but the agenda for today is we're going to talk about GASB 84, the new year-end reporting requirements that GASB 84 causes, some examples of accruals, deferrals, and inventory for resale, as well as some resources. And although we have been working with those financial managers that are directly affected by this update, we did want to present today to make everyone aware of this change, as it may affect you if you request or need a custodial fund in the future. We're going to try to provide more GASB 84 information and the year-end requirements that go along with it as we learn about them. And this has been a very recent change, so we do appreciate everyone's willingness to work with us to capture this data for year-end. So GASB 84. So what is this GASB 84 update? And I wanted to give some background first. So GASB stands for Governmental Accounting Standards Board, as you can see in this first bullet point. And they are the organization that issued standards for U.S., local, and state entities for how we have to report our financial statements. So as a state university, the University of Illinois follows these standards for our financial reporting. So GASB issued GASB 84 to identify and approve how we account and report our fiduciary activities, which at the university is accounted for on custodial funds. And these are the funds that start with a 9. And previously, these were called agency funds. However, this GASB updated the terminology to custodial funds. So while reviewing the FY21 financial statements, our new external auditors interpreted GASB 84 to require us to report these fiduciary activities on new financial statements. So the university added the statement of fiduciary net position and the statement of changes in fiduciary net position. So FY21 was the first year that these statements were reported by the university. And these statements require that fiduciary or custodial fund activities be reported on an accrual and deferral basis. So some of you may have worked with us last fall and the spring to gather this information, to add it and create these statements on the FY21 audited financial statements. Thank you if you've been involved. But going forward, due to these accounting changes, the university now has a need to identify and record these accruals, deferrals, and inventory for resale adjustments on certain 9D and 9G custodial funds. And just as some background, 9D custodial funds are the funds that are held for external organizations. So an example of a 9D fund that we see quite frequently is if we're hosting an outside organization's rotating conference on their behalf. So it's not a University of Illinois conference. It's owned by the external entity, but we are just simply hosting it on their behalf. Or 9G funds, those would be for UIS, the Registered Student Organizations, the RSOs, or for UIC, the Chicago Organization Funds, the COFs. So the student groups and clubs, like the fraternities, the sororities, those types of groups. So what does this mean for you? As a good business practice, we are going to be notifying those units that have those certain 9D and 9G funds that require this reporting. So we're going to ask those units to provide us any known accrual, deferral, and inventory for resale information at year end. So what we are doing, we sent out an email the first couple of days of May notifying those financial managers that have the 9D funds, notifying of them of this change. And we also set up an optional training session on June 23rd, I believe at 11 a.m. to go over this change with them in more detail. And we're also reaching out to those applicable RSO and COF offices to discuss it with them. And then on July 1st, we'll be sending out a targeted email to those financial managers with the fact sheet Excel attachment for those units to complete and submit their accruals, deferral, and inventory for resale information on the custodial funds. And we'll make those entries and banner at year end, similar to the process that we use for self-supporting funds with the fact sheets. So I did want to go over some examples of accruals, deferrals, and inventory for resale. What you see on the slide is more of definitions, but so accruals, these would be your accounts receivable and accounts payables. So if a custodial fund sold a service to someone in the current fiscal year, but they've not yet received payment as of June 30th, then we will need to record an accounts receivable entry in banner on that custodial fund. So for example, if an RSO was working and taking tickets at, say, like a tennis game this summer, and the athletics department is going to pay them and owes them money as of June 30th, then that RSO or COF would need to record that money as a receivable on their custodial funds for the services. Or accounts payable, so if a custodial fund owes for a service that they've received, a good or service that they've received in the current fiscal year, but they have not yet paid for it as of June 30th, then we would want to record that accounts payable entry and banner on that custodial fund. So this would be for that 9D fund I was talking about earlier, where we have that rotating conference for an external organization. If the event occurs, let's say the last week of June, and the custodial fund still owes the catering company for a meal provided at that event, then we're going to want to record that accounts payable entry on that custodial fund. Deferrals, you have your prepaid expenses and unearned revenue. So prepaid expense is if a custodial fund pays for a good or service in the current fiscal year, but they're not going to receive the related benefit until the subsequent fiscal year, then we will defer that as a prepaid expense. So we often see this with monthly subscriptions. Say they pay for a calendar year's worth of monthly subscriptions in January, we would defer the July through December portion of that payment as a prepaid expense, since that's not received until the next fiscal year. And unearned revenue is revenue collected in the current fiscal year that's not earned until a subsequent fiscal year. So if we're hosting that rotating conference for the 9D fund, we collect registration fee revenue in FY22, say in May and June, but the event isn't until FY23, then we would defer that revenue as unearned revenue. And then inventory for resale, this would just be any unsold goods or materials held for resale. We would want to record that value at the lower of cost or market and banner. So if you have an RSO or a COF that has t-shirts that they were selling for resale and they have some on hand as of June 30th, we would record that value as well. And then another little thing that affects these with this GASB 84 update is we are currently under the assumption that all other GASB standards also apply for custodial funds. Therefore, we'll need to be notified of any leases, such as equipment or building lease type rentals, from the perspective of the leasee or leaseor in order to comply with GASB 87 on lease accounting. So if you know of an RSO or COF like leasing a space, UAFR would need to be notified to verify that that lease is being accounted for correctly. And here are some resources. So we have GASB 84 and 87, as well as Section 2 of Policy on Custodial Funds. And then we have some contact information on here as well. And I see that I am almost up on time. So are there any questions? Not seeing any in the chat.
Okay, and please remember,
Well, if
you can
not,
always send questions later.
that's good.
So I don't think we have any questions right now in the chat. So thank you very much, Anne.
Thank you.
Up next, we will hear from Jason Bain and Jeff Weaver from UAFR with FabWeb and SecApp updates. If you guys could please take it away.
Thanks, Bill. Good afternoon, and thanks for the time on the agenda today. I'm Jeff Weaver, Senior Director in Property Accounting. Joining me today is Jason Bain, our internal training expert at UAFR. Jason, please advance that slide. Just wanted to present a few of our more important updates here last meeting of the year. Hope everyone saw the latest news center announcement about roles last Friday. An announcement went out about changes to the SecApp relative to assignment of the biennial roles. And this is a significant change to those roles. The permissions have been changed. They must be assigned at the 3-digit org code level now, which is now consistent with how all those FabWeb roles are assigned at the 3-digit org as well. And that was necessary. We had a lot of units who were inappropriately assigning unit contacts and unit heads at the 6-digit org level. And to eliminate that, we adjusted the actual roles themselves and the profiles to eliminate that. So from here on in, unit head and unit contact both assigned at the 3-digit org level, consistent with FabWeb. This will assist having fewer roles in the system relative to the struggles with incompatible roles, as well as it now provides automated controls in the SecApp to prevent any inappropriate assignments. We did, while we made this update, we did rename those profiles so that the application is the leading character in that profile name. So the roles of unit rep and approver that relate to FabWeb transactions, those now both have FabWeb ahead of them. And the two roles relative to the biennial inventory, unit contact and unit head, now lead off with that biennial name to hopefully make that more clear for the folks permissioning those requests. And for those doing that in the SecApp, that profile increment name path is unchanged. You need to go into Banner Finance, and under Banner Finance, there's FabWeb biennial profiles. And other than the ability to assign at the 3 or the 6-digit org level, nothing is changed in there and should be simple for your USCs to implement. There were two other aspects of this change in the SecApp that I wanted to share. We do have some limited units that I will be following up with, sending you emails relative to 6-digit org assignments and some limited cleanup. There really are only 22 chart org combination units on the entire Urbana-Champaign campus. So I will be emailing you in your unit for any of those changes. We don't want to do anything inappropriate to your roles. So we're going to email you. We're going to email the current FabWeb unit rep, your Banner financial manager, and your USC all together. So you all see this email, and the email will include guidance and a listing of the roles to review for removal. So not asking anybody to do anything right now, but when you get that email later in May, appreciate you reaching out if you have questions, and otherwise removing those 6-digit roles as requested. We also did have a bit of a cleanup project we did on our own with assistance from AITS. And we really cleaned up some unneeded roles we had roles assigned for terminated organizations, as well as organizations that didn't have equipment inventory. So we cleaned those out as well. Just wanted to share that. Jason, go ahead and flip. I also wanted to present information about our current FabWeb biennial ITPC project. And my apologies, we just haven't been out in front of the BMGs about this, but we implemented the biennial inventory system in December of 2018. After the first 2 cycles, we did surveys of units. We did focus groups in 2019 and 2020 relative to enhancements to biennial. We took those enhancements needed and we got them approved through the ITPC groups that review and approve those in 2020. But I will be honest, fiscal year 2021 was a big year. AITS had many significant projects that really required our project to wait for resources. So we're really working on this project now and wanted to provide a bit of a catch up on what we've done recently and in the past, as well as what's coming up. So in those recent and past updates, the most recent was a search by name for custodian equipment manager and any assignment of the inventory specialist in biennial. You can now search by name, not just UIN or NetID. We also have improved FabWeb messaging for any of the locked records. It's kind of a consistent problem for the unit users of the system. And if something's locked to another user and they previously didn't know who it was locked to, now we've updated all the messages in the system to identify who that user is and who they need to reach out to unlock that record. We also had some major improvements to biennial inventory very late in the process of the extended biennials. And I'm sure some of you may have struggled in the last biennial with the attribute approvals. We had a bug in there that was really causing people problems, but they fixed the bug. We've also added more feeders and exports, which were high on the request from unit users in biennial inventory. So just wanted to share some of those more recent updates. The larger updates that are still coming up, we're creating a new functional web page in both FabWeb and biennial for bulk record updates. So if you have to update 100 items in your lab per custodian or equipment manager, we'll have an easier process for you to do that. We're also going to create a search assets page within FabWeb. So that if you need to go out and search Banner for items that aren't within your own org, now you won't have to go to Banner. We're going to put a page in FabWeb that you can search the entire university Banner asset inventory for those items. But probably the largest and the biggest piece of our ITPC project is really a redesign of the FabWeb updates to existing assets. If anybody in the group uses that system, right now, there's not much functionality in there. You have to put in the P tag you're going to update to be able to update it. The redesign will look and work more like biennial inventory, where it's going to recognize your chart org permissions. It's going to ask you what inventory org or orgs you might want to look at, and it's going to pull those in for you. And it'll include a lot of searches and drop downs for searching those fields, similar to how biennial works. So I'm sure a lot of folks will be anxious to see that. And the current plan for that is late in 2022. It might be December 31st, but we are hoping to meet that goal for all that functionality. And I have one other topic, and that is a change to equipment loans and transfers. So any of you research units who do a great deal of loans or transfers, listen up. We have new forms on our website. So please always start with the fresh forms from the website. Because we've moved to Contracts Plus, we had to revise forms to include the Contracts Plus vendor ID number, which is now going to be required for us to be able to fully execute and complete these agreements in Contracts Plus. So just wanted to make a note of that. And if you are starting a loan or transfer, please start from the brand new forms that are out on the website. And with that, I'm going to turn it over to Jason Bain for a couple of announcements about staffing and training related issues.
Great, thanks, Jeff. Yeah, just really excited to talk about the new acquisition staff. We are fully staffed again, so we're pretty excited about that. Ron Janowski is the supervisor for this group, and you can see that I've got some asterisks there next to those 3 individuals, Brandon, Hunter, and Wen Rong. They've actually just joined us through October, right? So we basically, what do we got, like 6 months, 7 months with these individuals. So we've had quite a bit of turnover in our staff. But if you don't know who your new acquisition processor is, it's going to be one of these individuals. And for those of you at UIS, that's going to be Brandon Dabble. He is assigned specifically to UIS and covers everything that you do there. So get to know those individuals and build those relationships with them. So again, there's those resources. One of the things, again, to emphasize as we approach the end of the fiscal year is that FabWeb aging report. Begin to make sure, take a look at those reports, identify those transactions, those pieces of equipment that have been purchased recently or that are still hanging out there. They haven't been completed in FabWeb yet. So if you do have questions, reach back out to your equipment acquisition folks and get those things cleaned up before the end of the month, right, or end of June, rather to get those things taken care of. If you have any questions, again, those are the people to work with directly, but if they're not available, you can always reach out to Ron Janowski with any specific questions, again, as an additional resource. Big things happening. Again, lots of certification programs existing around the University of Illinois system. One of those is going to be equipment certification. This will started based on feedback we heard from our focus groups, right? What are you guys not knowing? What are you guys knowing about our equipment management processes, from the disposals to the transfers to just completing a new acquisition record? And, how do I make the necessary changes? If I bought 10 pieces of equipment, but I've only got one tag that's been created. So really focus again on that feedback from the groups and put emphasis on increasing that training availability, the fundamental knowledge before they even get access. So again, it'll be one of those things kind of like journal voucher processing, where you have to complete some fundamental training before you get access to FabWeb and can begin to process transactions. And again, with the goal to help increase the awareness around the system and throughout the organization on how to more efficiently process these kinds of transactions. This should happen ultimately towards the end of the calendar year. As we did early on, we went to focus groups and got your feedback. We'll be doing that again as far as reviewing that certification material. Did we hit the targets? Are we providing the information in a format that's easy for people to understand? So we'll be looking for volunteers again in the summer and fall to help us review what we've completed before we again launch that equipment certification.
Hey, Jason, I'd like to chime in too and just say that I did misspeak. I now know we're talking to Springfield and Chicago. So we do have about 26 units in Chicago that I'll be reaching out to, and 18 in UIS with some 6-digit org assignments that I'll be sending emails on. So thanks for that.
Perfect.
And my apologies.
Yeah, no worries, no worries. We did this last week for Urbana. So specifically, again, to our UIS folks, if you didn't see that announcement, AJ Ham is taking over for Jason Gibson as the surplus disposal contact. There is that surplus@UIS email address to handle that. We are working on updating all of our training and contact information on our websites. So again, take advantage of that information and make sure you're reaching out to the right people. And that surplus@uis.edu email address is the best target. And again, links to any resources we might have available for you in that area. All right. Any questions? I don't think I saw any, but again, we can address those after the next presentation starts in the chat box.
All right, that was great. Thank you, Jason and Jeff. Lots of good information. To move us along, we will now hear from Roger Friedenhagen on facilities use agreements and technical testing agreements.
Sorry, I'll try that share again. There. Can you see my screen?
Perfect.
Yes.
Okay, thank you. And I'm Roger Fredenhagen. I'm from University Accounting and Financial Reporting. I'm here to talk about a new policy that's about to go live for facility use agreements and technical testing agreements. The policy was developed by a large group of people, UAFR, government costing, sponsored projects, purchasing, some users, and others that I'm sure I'm leaving off that list. What drove the need for the policy is that in Urbana, these types of activities, those that were greater than $10,000 have traditionally been accounted for as sponsored projects, and they're now being accounted for in self-supporting funds. At UIC, those have always been accounted for in self-supporting funds, but that's what drove the need for the policy. So that was a big change for the Urbana folks. And there's my agenda. The change for Chicago is that there's the need in some cases to charge overhead to external customers when you've got a technical testing arrangement or a facility use arrangement where you're charging both external customers and grant funds. So a couple definitions: a facility use agreement is an agreement that defines the sale of access to facilities, equipment, or resources for the customer's research or development. And examples are use of a lab or equipment. A technical testing agreement is a contract that defines the sale of testing services. The services that fall under technical testing have specific characteristics. One, they are not readily available elsewhere. They are routine, repetitive, established process tests. We do not do interpretation or analysis of the results. Customer gives us the sample, we run the test, we give the results back to the customer. Oftentimes, there are service centers that have established rates that are selling these services, and the official definition is included in the general rules. Examples of technical testing, DNA sequencing, biological sample testing, those types of things. Technical testing does not include what we're calling sponsored service activities. So the difference is if it's a unique test that requires high level of expertise as opposed to a routine test, then it's not covered by the technical testing policy. Sponsored activities oftentimes have compliance or requirements or protocols, such as in situations where there's testing on humans or animals. And sponsored activities also do not normally have established rates, but there's sort of a budget with direct and indirect expenses. So if you have a technical testing arrangement, here's the process to deal with it. One, calculate a rate, execute a contract with the customer, we're assuming external customer. Establish a self-supporting fund if you don't already have one set up for the activity. Provide the services, then charge the customer. The concept here is that external customers have to pay at least as much as grant customers to keep us clean with the grantors. Grants, as you know, if you charge a service to a grant, then the grant is assessed an overhead rate. So if you sell the same service to an external customer, we need to add an overhead rate onto that cost of the service so that the external customer pays at least as much as what the grant customer pays. So if you sell to an external customer and you also sell the same service to grant customers, then there's a requirement to charge overhead to the external customer. If you are not selling to grant customers, you have the option of charging overhead to the external customer. Here's a table that's going to be in the published policy. The middle column there is, do I include overhead when I charge an external customer. On the left side, if you only have internal customers, well, then there's no external customers to charge overhead to, that first line. If you only have external customers, you may charge overhead. It's not required. And the amount you can charge is anywhere between 0 and the current other sponsored activities rate. If you have a mixed customer base, so you have external customers, you have internal customers, other university units, but no grant funds that you're selling the services to. Again, with your external customers, you're allowed to charge overhead, but not required. And whoops, sorry. The final box there, final line, if you have a mixed customer base that includes grant funds, so you're selling to external customers and you're selling to some grant funds, then you're required to charge the overhead to the externals so that the externals pay at least as much as what the grants pay. And the rate to charge is the greater of the rate, overhead rate is the greater of the rate that's charged to the grants or the other activities, other sponsored activities rate. So now we have billed the customers. How do we account for the revenue? The service revenue and the overhead revenue need to be split, either at the time of billing or after the fact in the self-supporting fund. So the revenue for testing services, we have some choices. Account 307850 is sort of the generic testing and analysis services. Or if you want to split it between internal customers and external customers, then there are account codes to do that. The overhead revenue needs to be recorded in 307921, has a long title, incremental upcharges to external customers for overhead expenses. I call it the overhead revenue. Now you've got overhead revenue in the self-supporting fund. What are you going to do with it? It needs to get into the administrative allowance fund, because what it's really for is to pay for high-level administrative campus level types of expenses. So the process there is to charge overhead expense to the self-supporting fund using account code 198590. And then the credit goes to the administrative allowance fund with a Oregon program code yet to be determined. And it goes into account code 308908, which is overhead revenue. We can set up automatic entries for you to do that, so that whenever you get overhead revenue into the self-supporting fund, we can set up an entry that will do this automatically. And that's my recommendation. The implementation, this is effective for new agreements starting last October. Again, that was a bigger deal in Urbana because there were activities that were being accounted for in grant funds that had to roll out to self-supporting funds. So for Chicago, it's less of an issue with this starting date. But going forward, again, if you're charging grant funds and external customers, you need to be charging the externals the overhead. Here's some resources. The draft policy is at this location. That's the location that where it was published for open comment. We expect that it's going to be live in the next couple weeks. And for questions on the accounting, I'm pretty much the person. There's a link to our who to ask list. And I probably don't have time for questions. I would suggest that if you have questions, contact me directly. And thank you for your time.
Thank you, Roger. I see we did get one question.
Did we? Okay.
We're right at 1:35, so maybe we'll get that to you offline.
Okay.
Get that
Sounds
answer
good.
For Rich. Perfect. Thank you. Next up, we have Stacy Balmas from the Office of Business Services. She'll be providing an update regarding business and financial policies. Take it away, Stacy.
Good afternoon, everybody. Just wanted to give you a quick update on some policy office changes, some updates in progress, some upcoming policy changes, and then just as always, questions and resources. I think you're probably most used to hearing from Dana Libro with these. She's taken a new position at UIC in the Office of Biz Budget and Financial Analysis. I am the Senior Associate Director of Business and Finance. I joined the policy office a little under a month ago. I also work with UCRO and had worked with the Contract Services Office, managing RevGen contracts for charts 1, 4, and 9. I've been at the university for almost 20 years, but with business and finance for about 9 or 10. So, and Brian Zump is still with us in the office. So you do get that consistency of still having Brian, and you'll be hearing from him here in a little bit. Just some updates in process. Jim Martini is going to give you a little bit more information about some upcoming changes to policy 8.1.4. Determining the allowability of gifts, prizes, and awards to individuals. We plan to update that on our website late this week, early next week. We were waiting until both of these meetings had happened so that we had the opportunity to share it with everybody before we updated it. And then just a couple of reminders about open comment periods. The open comment period for electronic codes for human subject payments closes today. And the open comment period for 15.3 on motor vehicle accidents goes through next Tuesday, the 24th. When I am done speaking, I will add the link to the comment blog where you can review the draft policies and provide any comments that, that you might want to. Just a little bit of background on 8.4.2. This is, we're updating language regarding the availability of E-codes as cash equivalent to incentivize human subject participation in research projects. It updates the E-code creation process, including designating individuals responsible for payments related to the studies and information required to be provided in backup documentations. So if you have any thoughts on that policy and you haven't provided it yet, you've got pretty much till close of business today. And then just some updates on the motor vehicle accidents policy. It's essentially combining contents of 3 former policies: reporting an accident involving a university vehicle, reporting an accident involving a commercial rental vehicle, and reporting an accident involving a personal vehicle while on university business. We're just combining that into one, and then adding some language regarding the applicability of personal insurance coverage and adding some information concerning insurance coverage for passengers. And so now I'm going to turn this over to Brian to speak a little bit about the publishing of the policy that you just heard a little bit about from Roger.
Thank you, Stacy. Our thanks to Roger for his excellent overview of the detailed management and accounting for facility use agreements and technical testing agreements policy. As Roger mentioned, this policy is going to be published soon, likely in late May, early June, with a communication to the business community to announce its arrival and a summary of its details. And as always, should you have any policy questions, feel free to contact Stacy or myself at our emails on the screen at any time. Thank you.
Check the chat here. Oh, you were seeing the presenter slides the whole time. I apologize. I thought I was sharing the correct screen, but I wasn't. So we'll do better next time. Thank you.
That's okay. We got a little bit of insider baseball. We saw how it was done. Thank you, Stacy and Brian. Where does that take? So now we have an update from purchasing and contract management from Deborah Matlock, Aaron Rosenthal, and Jill Menendez. Take it away. It's all yours. Thank you.
Good afternoon, everyone. I'm Aaron Rosenthal, Senior Associate Director of Contract Management from UIC Purchasing and Contract Management. I am joined today by MI Executive Director Deborah Matlock, as well as Jill Menezes, the Director from UIS Purchasing. The core of our presentation today is going to focus on some very important legislative updates that will be presented by Deborah. But before we get to that main event, we wanted to highlight just a few quick purchasing and contract reminders. Next slide, please. Oh, and one more, please. Thanks. First is around, quote, second parties in Contracts Plus. As a reminder, Contracts Plus is our new contract management system. And as a very important reminder, before submitting a contract request in Contracts Plus, the non-university party to that contract, what we're now calling a second party, must be established in the system. This applies not only to payable contracts, but also to revenue generating contracts and no-fund contracts as well. Most notably, just because your unit contracted with an entity in the old ICS days does not mean that that entity will automatically be in Contracts Plus already, especially on the RevGen and no-fund side. That becomes important. So please be sure to validate that piece of whether the second party is established before routing a contract to us. And if for some reason they're not in the system already, you would please submit a vendor information form to University Payables to have them added. Next slide, please. The other quick reminder relates to the purchasing and contract sequence. For those who may have gone through the CPA certification program, or perhaps seen a procure to pay overview presentation by Deborah or myself, this roadmap may look familiar. We're not going to get into the weeds of all these different steps in the roadmap today. Next slide, please. But instead, we wanted to make a comment specifically about revenue generating contracts. We're seeing a concerningly very large volume of revenue generating contracts being routed to our office, where the revenue generating activities began in many cases months before the contract request was ever routed to us. This becomes really problematic because if an issue were to arise before that contract was in place, the university isn't protected. And further, it's just not best practice to contract for services that go back to a date prior to the contract being signed. So please, as soon as you are aware of a need, whether that's on the purchasing or the revenue generating side, where interestingly, we seem to be seeing a whole lot of this, please don't commence receiving or providing services until the contract is executed and initiate the request as soon as you're aware of the need. We know we're really preaching to the choir today, so if you could please partner with us in letting your non-business staff, faculty, PIs, et cetera, know that the university really can't have contracts routed to us where these revenue generating activities began long before the contract was ever in place. With that, I'm going to hand things over to Deborah Mallock.
Thank you, Aaron. So I have put together some slides to provide information about legislative changes that have been made to procurement-related legislation over the past 2 years. I am only covering our slides 6 through 12, and the balance of the slides, which do represent 2021 changes legislatively, were presented in the October AFO BMG meeting and are merely included here so that you have a comprehensive package. We are expecting a fairly active veto session this year. You may be aware that the legislative session ended early this year, April 8th, as opposed to May 31st, which is the traditional end of the legislative session. And that was to really afford legislators opportunities to actively participate in their election process. So a number of legislators are going to be included in the primaries, which have been pushed to June of this year. So let me start. So in 2022, we had House Bill 2770, which had originated as Senate Bill 3884. It has been, in fact, signed into law as of May 6th, and I'll talk primarily about that legislation. There is another piece of legislation, Senate Bill 1915, which was sent to the governor on April 21st, and it has not yet been signed. Next slide, please. Within House Bill 2770, there were a number of changes, primarily to clarify some existing practices. In these sections highlighted here, we must now publish on the procurement bulletin notice of any exempt procurements that have an annual value of more than $100,000. Section 1-15.12 now states that we must do change orders for increases to existing procurements, not for either decreases or changes in the term. Something that we don't focus a lot on at UIC, but subcontracts and subcontractors, those terms now only apply if the contract is with a person or entity that exceeds the small purchase maximum of $100,000. It was previously, they were to be identified if they were at a $20,000 level. Major, we now have two sections that state that standard Illinois certifications must be provided only for those small purchases which exceed $50,000. It used to be that we had to have standard Illinois certifications for all purchases, and they attach automatically to an I-BUY requisition as well as to a banner requisition. The Procurement Policy Board, or the Commission on Equity and Inclusion, which was created as of 2021 legislation effective 1/1/22, they may object to a renewal or an extension of an existing procurement with a value of $250,000 or more within 14 days. Also related to renewals, no renewal is permitted if a vendor has failed to meet the BEP goal that was incorporated in its utilization plan, unless it's determined that the vendor did make good faith efforts to meet that goal and a waiver is issued by the university with the concurrence of the Chief Procurement Officer for Higher Ed. Next slide. Also within that section, we not only have to secure the CPO's concurrence on a renewal, but that concurrence shall not be unreasonably withheld or impair a university's determination that it chooses to exercise a renewal. There is no deadline on or definition of what unreasonably withheld or impair means. However, the CPO must post that waiver form within 5 days of receipt from a university. We had not previously had any constraints on protest in terms of the Chief Procurement Officer's requirement to resolve a protest. That has now been incorporated by legislation that a protest action resolution must be made within 30 days unless there is a court filing or an administrative action filed concerning that protest, which would in fact stay the protest. Leases may now exceed 10 years. They can now go up to 30 years for higher ed uses for healthcare, academic, dormitories, or other support to a higher ed institution. There has now been incorporated a bid preference for Illinois businesses for construction and related practices. One of the requirements for any procurement that had a value of $50,000 or more was there had to be disclosed if there was any debt delinquency to the state. That provision has now been amended to state that any debt delinquency must be cured within 7 days of submission of a bid or a competitive solicitation, or include a statement from the vendor that that delinquency is being actively disputed or that the vendor is seeking resolution of the outstanding debt. Next slide, please. Financial disclosures and potential conflicts of interest had previously been required for all bids, offers, and contracts that had an annual value of $50,000. That threshold has now been increased to $100,000 to be consistent with the small purchase maximum. Previously, we had to update vendors' disclosures and potential conflicts of interest if there was a contract that was going to be in place for more than 1 year. Now there's only a requirement for an affidavit instead of an updated full set of financial disclosures and conflicts of interest. And the of note is that there is now a state procurement task force. This aligns with the creation of the Commission on Equity and Inclusion that was effective as of 1/1/22. This task force has been designated to make various recommendations regarding state procurement processes. There are 31 members on this commission, including that the chair of the commission is now also the chair of the new task force. The first report is due 11/1/2022 regarding not only various procurement processes, but also the current structure of the chief procurement officers. And this task force is intended to be in place through January 1st of 2024. This is the one provision that was incorporated in House Bill 2770 that is effective upon being signed into law. What makes this very interesting, though, is that the Commission on Equity and Inclusion, which was to be effective January 1st of this year, and to have 7 members defined by statute, currently only has 4 members actually identified. So as we look towards June, it'll be kind of interesting to see what the new Commission on Equity and Inclusion will be able to effectuate, and how quickly the remaining 3 members will be identified and assigned to the commission. Next slide. Some other changes within this bill were to emphasize the preference for those goods and materials that are produced in Illinois, as well as for domestic products. There is a preference now whereby we could, in fact, make a bid determination to award to non-US products, as long as they do not exceed the cost of domestic products by 12% or more. And if there is an emergency or sole source, there is still a preference for domestic, meaning manufactured in the US products. And then there is a new requirement for compliance reports to this requirement from all purchasing agencies that will be due to the legislature every year. Next slide. Changes to the BEP Act, to the Business Enterprise Program Act, is, drum roll please, something that we have absolutely been pushing for, certainly within UIC and UIS purchasing. The BEP Council, which now reports to the new Commission on Equity and Inclusion, may adopt procedures to grant automatic certification to businesses that have been certified by other certifying entities. And to, so this is so major because even if a vendor had been certified by the National Minority Supplier Development Council, or the Women's Business Development Council, or the City of Chicago, or Cook County, or the Small Business Administration, or the Department of Transportation, I think I've hit them all, then they still require separate certification by State of Illinois Business Enterprise Program. So now this automatic certification should in fact increase the base of BEP vendors for which we can count the spend, and therefore get closer to meeting the aspirational goal of 30% of all contract spend should be placed with BEP certified vendors. This change to the other thing that I've highlighted here is the change to the I almost said human resources, sorry, to Human Rights Act, is that if there is any outstanding non-compliance that have been alleged against a vendor, it now allows a reasonable opportunity for the bidder to cure such non-compliance such that it will not interfere with an award of a contract from the university. Next slide. In this Senate Bill 1915, the one thing that we really want to point out, which has not yet been signed by the governor, is that this new bill is an unfunded mandate, namely that it prohibits single-use plastics, and a bidder which can in fact fulfill a bid that is not using any non-recyclable foodware could in fact have a preference as long as their price is not, I'm sorry, I'm stating this incorrectly. A bidder that is not bidding single-use foodware could in fact lose if there was a bidder who is offering recyclable or compostable foodware items. even if that bid is greater, as long as it does not exceed 5% of the lower bid. And there is also a preference given for the prohibition of single-use plastic straws unless we are servicing medically vulnerable persons. Try saying that fast 3 times, which is an undefined term. The rest of the slide deck is in fact a restatement of the 2021 legislative changes. And we have, in fact, as I said, we've incorporated all of the changes over the past 2 years for your information. And if there are any questions, you can certainly direct them to either me at UIC, at Aaron Rosenthal at UIC, or at Jill Menezes at UIS. And I'm not sure, Jill, if you wanted to add anything.
Very much, Deborah, for that good explanation on the changes in the legislation. Very important.
And I would just throw in, we know that not everyone may get as excited about procurement legislation as we all do, but notably in all of this, especially in the SB 2770, there is procurement relief. We had hoped for a little bit more in the legislative session. That didn't end up with as much as we were hoping for, but there are some steps that are certainly going to ease up some of the procurement activities by all of our stakeholders, in particular with those financial disclosure thresholds and certifications. So we're excited and we think you'll see some positive impact.
Your excitement is infectious. Your excitement on behalf of us is infectious. What was that for your presentation? I'm sorry, that is. So we actually have a minute for, there is one question. Is there any update on Amazon for Business?
There is not. We have been actively pursuing Amazon, and they have been promising monthly that they are close to some agreement on the certifications. Because of the value of what we spend with Amazon, or what we had spent over the 1-year period where we had assessed, we had determined we had spent about $7 million, of which UIC had spent about $2.5 million. That continues to be a barrier. And so if Amazon is unwilling to comply to state requirements, the Assistant Vice President, Aaron Carter for IPEC, has been trying to also work with the chief procurement officers to try and determine if we can reach some kind of an amicable solution, but it has not happened so far. What becomes real interesting about this is that we were given a preview of the roadmap for Jagger, which is our e-procurement and contracts plus supplier. And they are, oh, I don't know if I should even say it, but they have in fact now struck a relationship with Amazon where they are going to be putting up a catalog for Amazon on the Jagger platform. So if we ever can reach agreement with Amazon, it will be easier to in fact access them in iBuy.
Okay, great. Thank you. Thank you, Deborah.
Mhm.
I want to make sure I circle back. And Rich, I think we're in the process of addressing your question. You know, we're kind of rapid fire today, but we'll get an answer for you. I want to thank again, Deborah, Aaron, and Jill for that update.
Oh, and Bill, looks like one more quick one was submitted.
Okay.
I can answer this one quickly. Does
Okay.
Contracts Plus have all the contracts imported from ICS? All of those ICS contracts should now be in there. There are some quirks to the way that the search works. So please follow up with me directly if you're having challenges locating contracts, and we can walk you through the job aid and give you a little bit more support. It may just be a matter of the search not working exactly as you're intending it to.
And Aaron, I just want to jump in real quick. If they were looking, if anyone was looking for anything from legacy, from pre-ICS, those have not yet been migrated, but anything that had been in ICS has been migrated.
Thank you, Steve.
All right, thank you for those quick responses. And I think we're good. We're right at 2 o'clock. If I could ask everyone to take, we'll do the full 5 minutes. I want to give everyone a chance to freshen up. If we could ask everyone to be back at 2:05, we'll see you then. Thank you. All right. We are right at 2:05. So I think we're good to go. Okay, well, welcome back, everyone. A quick question over here. I'll let someone grab that. We're kicking off the second half of today's agenda with Mark McIles from University Payroll and Benefits with a CMS part-time audit update. If you want to take it away, Mark.
Yeah, thank you. Now, I was going to go ahead and share my screen here. So I'm going to get that up.
All right, we're seeing a CMS part-time audit.
Okay, thank you. Yeah, and as I said, I am Mark McGiles with the University Payroll and Benefits Office, and I'm here to talk about the CMS part-time audit. Some of you may have heard about this, some of you probably have not. So we're just going to provide a little information today and hopefully spread some awareness. So here we go. So our objectives today really are just to talk about the purpose and the history, the elements, the actions that may be taken, the impact to employees, and what's needed from you guys for us to complete this audit. But as I said, the most important thing we want to do is spread some awareness and provide some information about this. At some point, an employee in your area may be affected, and we want to make sure you understand, what might have happened and who to turn to for explanation and some assistance with answering the questions and from the employees. So the history is the state of Illinois conducts an annual audit of the employees' time worked. Now, they've been doing this for most agencies for several years. In 2019, it was announced that they would be enforcing audit onto the universities as well. Essentially, the state's trying to identify employees that are receiving the benefits that of a full-time employee, but who are only working the equivalent of a part-time employee. And the full cost of health coverage is funded partially by the state and partially by the employee's premiums. And the amount funded by the state is dependent on the employee's actual time worked. So what we're really looking at is those individuals that have accumulated 30 days or more of unprotected dock time during an audit period are considered to be no longer full-time and will be required to pay an increased percentage for their insurance. They're also going to be placed in a leave status in CMS, and they'll be responsible for the full cost of coverage in the time that they're in that leave status. And then the third thing is they'll also be direct billed for premiums. So we've partnered with System HR Services to build some queries and to get our process in place. And we've completed the annual audit during 2020 and 2021. And so far during those years, we've had about 40 people that were affected by this, but it's a pretty significant impact to those employees when they are affected. But we also realize and recognize that we need to do something to track this on an ongoing basis and notify employees that they may be violating this audit and what the consequences of that might be. So to meet that, we've developed what we're calling our ongoing process. A little more background, I guess. The authority for this is really in legislation. The Illinois Group Insurance Act provides for the language that provides for this audit. Employees are notified of this in the state employee handbook, so it is in there in writing for them. Most of the employees that we have had affected so far have been in unions of some sort. So it's important to note that AFSCME did agree to this back in 2006 in a resolution. And the period that we're looking at as we assess our employees is a time worked between June 1st and May 31st each year. The things that we're looking at in the audit really consist of two things: the population, which is our civil service, CMS eligible, non-exempt employees, and then the time that they've used or the time that they've submitted. And we're looking at that unprotected dock time, which really amounts to service suspension time, and then unauthorized dock time, such as no call, no show, and benefit time without hours available. There's a couple other authorized dock times that could be unprotected, but the main ones we have experienced in our audits over the past couple of years have been the first three there: the service suspension, the no call, no show, and the benefit time without hours available. So it's kind of important to note that excused time or approved time off does not necessarily equal protected time. And we found that mostly in the area where the benefit time with no hours available, where an employee has exhausted all their sick time and then they need to take a sick day. The department approves it as an unpaid day. That was excused by the department, but it's not protected under the terms of the audit. And then a couple examples of protected time, just to give you a reference here: FMLA, VESA, union business, military call-up. Those are all protected times that would not count against the employee. So we did develop a bunch of queries to identify the time in the population, the jobs and the days they were active, and the earn codes used. And we use that to evaluate the employees. And then a new thing we're doing, and that's why we're kind of bringing this out to the light, because we're going to start communicating a lot to these employees that are affected. And this may come back and be brought to your attention at some point by an employee. So when employees reach at least 10 days of unprotected dock time, they're going to get a letter, a communication from us that explains the audit, provides some information about what's going to happen if they violate the 30-day threshold of this audit. Same thing will happen at 20 days. Then at 30 days, they're going to get a different letter that says they have violated now, and here's what is going to happen. And that communication will go to both the employee and to the department. And we've central HR units have provided us with a list of the HERFI college contact for each area. So that's the person that would receive that letter as well. So along with sending that 30-day communication, explaining what has happened and detailing the options, we're going to update CMS to indicate this leave status. So now the employee will now be responsible for the full cost of the insurance for any pay period they remain in this status. And they will remain into the status until they have reached a pay period that has no unprotected dock time. So our goal with this ongoing process is to identify and communicate to the employee so they can make changes if they want to. They may have the opportunity to opt out of the coverage if they don't want to pay this much higher cost, or at least they'll be aware that this is happening and they can make these payments as they go, instead of, as a result of the annual audit process, receiving a retro bill and owing $10,000 based off of the past audit year. So we're hoping to give them the opportunity to make some changes and be more current with making that responsibility for the payments. So the impact on employee, we've talked a little bit about, I've already said this, there's going to be an increased cost to the health and dental premiums. They're going to be direct billed for any time that they are in this leave status as a result of the audit. The third thing though is they will be considered part-time for insurance beginning on September 1st following the audit year and continuing until August 31st. Regardless of if during that time period they have no time missed, no unprotected dock time, they will remain in that part-time status in CMS and pay a higher premium for every month or every paycheck for their insurance premiums. So if the employee does not exceed 30 days in the next audit period, we'll return them to the normal status from that part-time back to a full-time, normal cost, normal deductions for their insurance. So what we might need from the departments and the units is documentation. We have to provide documentation to the auditors. That would include timesheets and time records, and maybe some approvals like FMLA or VESA approvals. We're not auditing, or the audit is not covering, was it a valid FMLA? Was the approval process for the FMLA correct? It's just looking at, was it an FMLA or not an FMLA, which would allow us to exclude it from the audit if it's approved. And that's just a brief overview. Considering time, I don't know if we even have time for questions, but probably would be best if you just reached out directly to me or to Susan Strickler if you do have questions about the audit or would like some a deeper dive into it. I gave a very high level overview of what we're doing with it, just to get you this in front of you so you know if your employees or people in your areas are getting communications, what it's about, and if nothing else, who to talk to. And that would be me or Susan in this case.
Great, thank you, Mark.
Thank
I
you.
expect people will be reaching out to you directly with questions. So that's great. We appreciate the updates. Great presentation. We will now hear from members of our source to pay team, Jim Martini and Philippe Prishmish, with an update on the Chrome River dashboard.
Well, thanks, Bill. Philippe, chime in if you've got some comments, but I'll start off here, I guess. I think this is going to turn into, while Chrome River is part of source to pay, most of this is going to turn into a conversation about Chrome River and progress with that and plans with Chrome River. But before I go there, I'd like to talk to you about a couple of things that are coming. Stacy mentioned that there's a correction coming to 8.1.4. That one is a policy that deals with gifts and so on to employees, and we had a complication, a conflict between section 18. So we're correcting that. And there's also some work going on about 8.1.1, where we've polled some of our peers in the Big Ten and determined that there may be some ways to improve our business meal policy, clarify it, make it a little bit simpler, make it consistent or more consistent, and maybe specifically help better with student meal situations. I do want to comment on the fact that all units on all three campuses, all three universities, medical centers, everybody have been a great help in getting our card transactions resolved in the legacy systems. I never would have thought I'd be able to sit here and say we finished all P card transactions and all T card transactions in the P card web solution and TEM respectively. So please, thank you for your attention to that. Pass that along. I did want to clarify one thing. There has been some confusion about when TEM is going away and when it still can be used and so on and so forth. And we are keeping it open for new transactions to non-employee vendors. So if you're making a direct pay, in other words, a non-purchase order payment for a real estate lease or a utility payment or something that does not involve a purchase order, we're still doing those in TEM. Non-employee payments, when we retain, we host a speaker, we pay their expenses in TEM. When you pay an honorarium, we still pay those in TEM. Now, we've started a project that will replace that and move that, migrate that functionality to Chrome River, but there's been confusion expressed from several points. So TEM is still available for new non-employee transactions for a few months yet. We do need to commence working to close advances in TEM. Stay tuned for more information. We've been telling you, reminding you that we need to close advances in TEM and open new ones in Chrome River. So we're working on some instructions that will help us do that, but I will ask you please to pay attention. Those of you that have advances in your departments, please pay attention to some of our future emails. Talking about Chrome River, we recognize that there are some gaps and we're working hard to fix some reporting and informational needs that have not yet been met. We've got some things in the works that we believe will dramatically improve some of those gaps. And I appreciate very much your patience. We know specifically that there is a lack of a merchant name really visible in card transactions and in Banner and Ledger. We're working to get that better. We also know that there's some confusion about where the report number is. And if you're looking for the Chrome River report number, if you take nothing else away from today, except that the Chrome River report number is in Banner as the vendor invoice reference field. So you can find those if you can get into Banner, and by that they are carried over to your ledger. So you should see the invoice number for a P card for a Chrome River expense report is the report number. To date, we've processed 52,451 reports in Chrome River, and we've had more than 6,000 independent users. So I'm pleased that that's continuing to go. And one of the things I wanted to show you, and I apologize for speaking very rapidly, but one of the things we heard early on about reporting was that users were not able to see transactions that were not, they didn't touch. So in other words, I'm going to have to ask, I'm going to take the screen here if I could, please. I don't know who's displaying. Thank you. But I want to show you a dashboard. Can all of you see? No, that didn't happen very well. Can all of you see my Chrome River
Yes.
QA?
Yeah, we can see it now.
All right, thank you. This is QA, okay? We're not going to see any real stuff in here, but here is a recent report that we think will help units to identify transactions that are beyond the individual user's purview. In other words, in the standard inquiries, you could only see your own transactions. But in Chrome River, if you go to the pancake or the hamburger, whatever you call it, go to expense management, here is a new functionality that broadens the scope. You can search by an expense owner, and I'm going to show you that. I'm going to pick on Melissa Plotner, and I can search all of her test transactions that she did. And remember, this is QA. So you can sort it by export date. You can group it by submit date by dragging, by dragging the report submit date column up to the top of the header. So it groups them, in this case, by submit date. And you can see that when I close that, you'll see that these are all of Melissa's reports. And I didn't touch any of these. So you can see the unit, you can see any of your individual person's reports. If you know the report number, if you've obtained it from Banner, for example, you can look by an individual report number. By clicking on any of the lines, you can actually open, wouldn't you know it? Try another one. You can actually open the report. So you can see here's one that would look just like a report. And you can get to any report by any user if you know the report number. Now there's one qualification. The report has to be exported. It has to have been completed. And we're working on improving some of those paths, some of those ways that you can get to work that's in progress. We did send out a reminder about this. We did send out one of our tips and tricks. And if you are not enrolled to receive our tips and tricks and the OBFS news items, I'd encourage you to sign up for that. We're communicating that way. We're telling you about new things. We're reminding you of things that maybe you saw in training, but perhaps you've forgotten. So this is a new report, like I said, and if you do know the report number, you can search for a report number. And actually, I don't recall it right now. I was trying to cut and paste one, but I was unable to do it. This is where you would put the report number that you might obtain from Banner in the invoice record, the TE record, if you will. And you can then go in and look and see the attachments and see the history and work with that expense report. So I think my time's up, if my Mickey Mouse is right. And Bill, you didn't even have to give me a hook.
Well, thank you, Jim. Thank you for the demo. I know you're kind of under the gun with the quick time, but that was a lot of information and a good demo. I saw Melissa handling a lot of questions, so thank you, Melissa. So thanks, Jim and Philippe. Let's see, 2:25, we're still right on track. We will turn our attention to Brent Rasmus and Derek Briles, who will provide an update on the internal controls initiative. If you want to take it away, gentlemen.
All right, I will jump right in. I just want to make sure that that Derek, you've got control of the slides, correct?
That's correct.
All right, we are here today to provide an update on the effort to improve controls related to system access combinations across equipment tracking and procurement. Can you go to the next slide? Thank you. It's been a while since we presented on this topic, so we'll go through some of the background. We'll talk about an exception process to allow for provisioning a system access for those high risk role combinations and talk about next steps. Next slide, thank you. Very brief summary of what prompted this effort. Over the years, there's been a few what I would call isolated situations of employee theft of equipment. And these are things such as computers and iPads. And in these situations, the employee had system access or roles in procurement, such as iBuy or PCard, and also to equipment tracking applications such as FabWeb and biennial inventory. So having this system access combination makes it easier for someone to purchase equipment and conceal theft because of the lack of segregation of duties throughout that whole process. A group was formed at the direction of senior leadership, and we were asked to look at ways to mitigate that risk. And as a side comment, some universities have had huge employee fraud situations happen for years. About 2 months ago, Yale University announced a similar scenario to what I'm describing here. And from what I remember, the fraud lasted about 8 years and totaled a staggering $40 million. That is obviously a very extreme scenario, and I'm not in any way suggesting that's what's happening at the University of Illinois, but it is a real life recent reminder for the importance of good internal controls. Next slide, please. One of the outcomes of this review performed by the working group formed at the direction from senior leadership was identification of the highest risk system access role combinations, which give an individual too much control over procurement of equipment and tracking of that equipment. These system access combinations are also in the slide here, and I won't go through those in detail, but they are also on the internal controls website. Another action was to limit the future provisioning of these system access combinations. Next slide, please. So what work has been completed thus far? The security application was updated and now prevents future provisioning of those highest risk role combinations. There's a website dedicated to this initiative. It's got resources and information, which I hope is helpful for determining what actions might be taken so users don't need to have this combined system access. There's also a list of those individuals who currently have these permissions in case you want to go look for your unit. And last time I looked, there was about 600 individuals system-wide. Another major task is the work that many of you have had to take in response to this significant request that we're talking about here today. And those actions may have included restructuring job responsibilities within your unit, updating permissions for everybody, especially for those with a small staff. I also want to sincerely say thank you to everybody for your help and feedback throughout this entire effort. We've received a lot of good ideas and comments, and we've adjusted as best as we could. I know this has not been an easy issue to resolve. I know because it's been difficult for me to resolve within my own units. So bottom line, we know this has been a major disruption to your business functions, and those business functions need to continue. So to ensure that happens, we worked out an informal process for those units who had unfilled roles about this time last year, most notably for roles associated with FabWeb and Biennial. And that allowed for provisioning of this system access for those units who weren't able to segregate the tasks due to low staffing levels, as long as other mitigating controls could be identified which effectively lower the risk down to more of an acceptable level. So for example, maybe the receiving function and statement reconciliation is handled by someone independent of procurement and equipment tracking. Since other mitigating controls could be identified, system access could be provisioned and allowed those unfilled roles to be filled so that all the business functions for your unit could continue, and internal controls were still stronger and more reliable than they were before. Next slide, please. Again, appreciate everybody's work on this effort to date, as well as the feedback and ideas that we've received from many of you. Again, the objective is to hopefully eliminate the need for the combined system access for any single employee entirely. But we also recognize that's just not possible for all units, particularly those with small business staff. So in conjunction with the system-wide internal controls steering team, including myself, representation from university audits, and each university provost or chancellor's office, as well as Derek, we developed an online exception request process. This is an online application which allows an employee to request a high-risk role combination for themselves, or this can be done on behalf of somebody else, such as business staff, maybe a USC or somebody else within your unit. The important part of this exception request is to identify and implement other controls within your unit that effectively lowers the risk for an individual by having this combined system access. Once submitted, the request will go to the unit head for approval, then to the college, typically the dean or the dean's designee with administrative responsibilities. And finally, it will be reviewed at the university level. And for UIC, that'll be Dana LeBreau in the Office of Budget and Financial Analysis. And for UIS, it will go to Arnold Henning. So with that, I will turn it over to Derek, who will walk us through an overview of the online system.
Thanks, Brent. So yeah, we'll do a really quick walkthrough here, but later on, I'll tell you about ways you can get a more thorough demonstration. So this is what the form looks like. Immediately, you're going to be asked to provide what role or roles you are requesting. You can request one or many, but they do all have to be within the same chart or combination. So here, I'm just going to select FabWeb Unit Rep. Then it's going to ask you the chart that this role will be in. For the sake of this demonstration, I'll choose chart 2. And then you'll have to enter the name of the person who is going to be holding this role. So who you're requesting the role or roles for. You need their name, their university email address, and their UIN. And then there's an optional question right here. This eventually will be used in the future, but just asking if this is a new request or you're trying to resolve an existing role conflict. After you've done that, you can move forward. And at this point, it's going to tell you to go back to the internal controls website that Brent mentioned earlier. On the website, there are strategies for preventing the need for these high-risk role combinations. It gives you suggestions of roles that you can use, business processes you can employ that'll remove the need. And then it's also going to give you some suggestions about mitigating the risk that's associated with these roles should you need to move forward and request the exception. So at this point, you just need to select yes or no. Yes means that you found a solution on the website, you no longer need the exception. No means you still require the exception. So you can move forward. And then here are the mitigating controls that Brent mentioned. So here you have to provide some detail about what business processes, what changes you are going to put into place in your unit to ensure that everything is being done correctly and in accordance with policy. You'll see that there's a character limit here just to ensure some sort of thoroughness in your descriptions. And then your very similar question. So this is asking about your internal review procedures. That's how you're going to make sure that those mitigating controls that you just described are adequately being followed. So this is just how you're going to monitor activity of employees who hold these conflicting roles to make sure they're following your mitigating controls. After that, it's going to ask for your information as the submitter. You can submit this for yourself, you can submit this for somebody else, but we do need to know the information of the person submitting this form, name and university email address. And then you're getting to the final stages of this request form, and this is the review for the approvers. So you need to identify the unit head. So this should be the unit head in which this role is going to reside, right? That's where the potential risk is. And the unit head needs to be aware and responsible for that risk. And then the college level, you need to provide a name there as well. And like Brent mentioned, that's typically a dean or a dean's designee with some administrative responsibilities for the org that you entered. And then you also need to enter the information for the USC that'll process this request. You can use this link to go look up your USC. If you already know the USC, you just put their name and email address in. That's because this is going to automatically generate an email to them once approved. And then you can verify your information and then click yes that it's done. And then now that starts the approval process. So I realize that's a very quick walkthrough, but as I said, we do have some other avenues for you to gather more information about this. So the first or next steps is an update to the internal controls website. I put that URL in the chat earlier. That update is live right now, so you can go and see the new information that's out there. That includes the link to this exception request form. As of tomorrow morning, the new increment will be live in the security application in the banner finance section. There'll be an internal controls exception increment in there, and that's where these roles will live. You'll also see a lot of communications going out tomorrow. And in those communications, we're going to give you more information about this request. And then we're also going to give you the ability to sign up for live demonstrations. These are 30-minute sessions where we will go through the entire process, filling out the form, conducting the approvals, and then submitting the request in the security application. It'll be a full end-to-end demonstration. You can find a link to that on the website. You can find a link to that in the communications. And then finally, we will be sending a communication to all USCs so that they are aware that this new increment is available in the SEC app, and also make sure that they are aware that there is authorization attached to that, which what that means is once the USC submits the request in the SEC app, that's going to trigger an authorization process centrally. And it's just a final check to make sure that all requests submitted through the SEC app have an approved request form on file. If that approved request form is on file, that request is immediately approved, and then it's processed just through all the normal processes through which system access is provisioned. We might have time for 1 or 2 questions. If you have anything burning you would like to ask right now. If not, we'll hand it back over and you can continue with the next presenter.
Thank you, Derek. Thank you, Brent. I've seen this presentation a couple of times now, and it always strikes me how important an understanding of internal controls is, and what a great acknowledgement this exception process is of kind of the different needs of different departments. So thank you for that presentation. Next up is Julie Thompson from Real Estate Services to provide an update on off-campus space leasing.
Thank you so much. I really appreciate it. Glad to be here. Hopefully you can see my screen. Today, I just wanted to give an overview of our off-campus space leasing requirements and procedures. We've had a lot of questions that have been coming up lately and some issues. So I thought it might be a good time to give some additional information in case anybody has the need for space for their unit. So we'll go over a quick procurement code highlight, some landlord requirements, the basic leasing process, best practices, and other considerations. So we'll get right into it. So I wanted to highlight the procurement code for request for information. So this is required for any expense lease with fiscal year lease costs that equal or exceed $100,000. And that is for rents, which would include common area maintenance and taxes if applicable, as well as tenant improvement costs, or space that is greater than or equal to 10,000 square feet. And the reason I wanted to highlight this is that we're finding that with construction costs escalating so quickly now, that it's really becoming difficult for us to do offsite space leases and stay within that procurement threshold. The RFI process can add anywhere, from 6 to 9 months to the process. So by the time you get into the space, it could really be a year or longer. And we're finding that because of our 10-year lease limit, with the exception of academic and healthcare and dorms, we are having trouble keeping those TI costs to a manageable level where we can stay under that RFI threshold. So just something to consider as your units are looking for space, that we may find that the RFI threshold is being pushed on a little bit more of a routine basis than we've seen in the past.
Julie, excuse me for interrupting. We're not actually seeing your slides forward. I think
you're not.
We may be seeing the wrong screen.
Uh-oh, I'm sorry. Let me see here. It went well in the process. So what are you seeing here?
We are just seeing the slides outside of the slideshow.
Oh gosh, okay. Let me see here. I apologize, everybody. Okay, are you seeing it now?
We're seeing the presenter view.
Yeah.
Okay, you know what? All right, I'm sorry. I'm going to keep on going because I don't want to waste time. As long as you can see the slides, if that's okay, if everybody's okay with that. Okay.
Yeah,
yes.
Sorry
No
about
problem.
that. Yeah,
No,
I'm
no
not
worries.
sure what's going on. Okay, so the next topic I wanted to cover is landlord requirements. The reason for this is that there are some items that can take a little bit of additional time as we're processing leases and looking to execute. And so long form certifications and conflicts form and financial disclosure would be required for any leases costing $100,000 or more annually. And then also any legal entity other than a sole proprietor has to be registered to conduct business in Illinois and be in good standing with the Illinois Secretary of State. Another certification that would be required as part of our lease is that if they have any full-time, if they have 15 or more full-time employees, registration with the Illinois Department of Human Rights is required, and they need to provide that contract number as well as the expiration date for that contract. And then lastly, the Illinois Board of Elections certificate would be required if the vendor does 50,000 or more in aggregate business with the state annually, unless they're a nonprofit or a government entity. So we like to just highlight these items as things that kind of can throw a little bit of a kink in the process when it comes time to be executing the leases, and landlords need to provide additional information than they had anticipated. Lastly, part of our lease form is the real estate disclosure form, and this must be signed along with a notary validation. And so with a lot of the remote work that we're doing, we can find that sometimes this can throw landlords for a loop as well. So we like to highlight that as something that will be required so that they can plan for that in advance. Our leasing process is a little bit different than contracts and purchasing process. We do not initiate contracts in Contracts Plus. So our process begins with an inquiry to the real estate services. We ask that the unit reach out to us to discuss the need for off-campus space, and do not initiate a contract in Contracts Plus. We would do then all our internal approvals with a RECARF, which is the real estate contract approval form. If the space is 10,000 or more, as mentioned before, or costs are estimated to be in excess of 100,000 in any fiscal year, we have to go through an RFI process, and then the lease has to be approved by the Procurement Policy Board. And again, this all adds time to our process that sometimes the units don't understand. So which can delay not only the execution of a lease, but also the occupancy. Real estate services then enters lease negotiations with the landlord after a space is identified. And then we would work with the landlord and legal to draft a lease agreement. Our form is highly preferred as it really reduces the time needed for legal review, but we can use third-party forms if the landlord absolutely requires it. Our contract approval process, as I said, is a little bit different because we're not going through Contracts Plus for our approvals. So all of our department level approvals for department head, dean, director, and vice chancellor and chancellor when required would be obtained on our RECARF form, which can be signed digitally. You know, we used to route it as paper form. We use it as a digital form now, but that is our representation of our internal approvals. The exception to that would be UAFR for GASB 87 review, and then if chief legal and president's approval is required, then we can obtain those and will obtain those in Contracts Plus. Something to note on the RECARF is the contract amounts do include the tenant improvement costs on an annual fiscal year basis. And an expense lease of 200,000 or more, including those costs on a fiscal year basis, would require Board of Trustees approval. With them only meeting 6 times a year, we can also find that process can delay the execution and occupancy in these off-campus spaces. And then any expense lease in 250,000 or more in a fiscal year would require the chief legal and the president's approval in Contracts Plus. Something that we do require is that the landlord must sign first. They can sign with a digital signature, and then we in real estate would load the contract into Contracts Plus to be signed by our comptroller delegate. As was already noted, the second party has to be in iBuy and Contracts Plus in order for us to load the contract into Contracts Plus for comptroller signature. So the vendor form has to be completed well in advance of execution, and we would work with the unit and the landlord to help assist with that process. So we do have some guidelines for best practices. We do ask for advance notice and that you plan ahead. Please reach out to us as soon as you may think you need space. We're always happy to answer questions and discuss the process and options. And please allow plenty of time and assist your units in setting expectations for how long the leasing process may take, whether it's lease negotiations and drafting, legal review, space searches, RFI, and then any approval processes. You know, as I said, the lease process can take several months. Furniture alone, we're finding now, can take 12 weeks or more. You know, and that's in addition to any build out that might be required for the space as well. Please ensure that the funds are available and approved for rent and tenant improvement, as well as wiring, fixtures, furniture, and equipment costs. And then, as I said before, please help us set timing expectations with your business unit. And if you have communications with the landlord, if we've, you know, maybe been in the space or we're expanding, you know, please assist us with that as well. Please do not start lease contract requests or obtain approvals in Contracts Plus. As mentioned before, we are using the RECAR form. Please do not occupy a space without a fully executed lease in place. And please do not initiate a space search or engage a real estate broker without contacting us first. Please do not sign a letter of intent without talking with us first. And then please do not sign any agreements that are legally binding or commit to space altering alterations or improvements. I know I'm running out of time here, but one thing I wanted to make sure that we discuss is that regarding the rental payments, the units have to set up payments either through TEM or as a recurring payment not associated with a PO. And real estate does not handle rental payments. And then lastly, for space that is off campus, the unit is going to be responsible for contracting and paying for utilities, phone and internet and data. Any maintenance items that the landlord is not going to provide. So that's something to keep in mind, whether or not your unit would have the support and the ability to contract for that off campus. Lastly, I've got some contacts for you. Please do not hesitate to reach out to us if you have any questions or if you have any space needs that you anticipate you might have upcoming. Thank you so much for your time.
Thank you, Julie. Sometimes PowerPoint will surprise us. It's just one of the laws of presenting. No, it's one of the laws.
Yeah,
out of our control.
I appreciate your patience with me.
No, great presentation. So last, we're going to turn our attention to Liz Borsage, sorry for that pronunciation, from the Office of Planning, Sustainability, and Project Management with an update on the landfill waste reduction policy.
Hi, everyone. Thank you so much for staying through till the end. I'm going to drop my links in the chat right now, and then I'm going to share my screen. All right. Oops. Can everyone see my screen?
Yes.
Okay. All right. So I'm here to talk about the landfill waste reduction policy that was signed by the Chancellor and went into effect February 1st of this year. This policy is the latest university commitment to reducing our waste, a mandate that began in 1986 with the Illinois Solid Waste Management Act. Though this is a new policy at UIC, I will also share the financial, environmental, and social case for implementing this policy. I know no one wants to hear a new policy to adhere to, so that's why I'm going to give the other arguments for it. So why is sustainability important? Sustainability is a part of UIC's campus culture, which enhances UIC's mission for student success, improving public health, and serving the communities of Chicago. Who is responsible for carrying out this policy? We all have a role to play. All financial officers and procurement users who are responsible for procuring goods and services to meet the department's needs play a critical role in supporting the university's sustainability. So waste is a sign of inefficiency in a system. In 2019, the last year the campus was fully open, we generated 7,913 tons of waste. 4,039 tons, which is the majority of that waste, was landfilled, which equates to 431 pounds per person, per campus user. This is not counting the waste that we generate in our own homes. This is only the waste that we generate at UIC when we come here. Oh, hold on. By the way, does anyone know where our waste goes? All right, you're all mute. It goes to Atkinson, Illinois, which is about 150 miles west of here. So that 4,000 tons is being hauled 150 miles every day. So to reduce our waste on campus, here are 5 key areas where purchasing can make an impact if we do it. Reducing bottled water purchases, reducing paper printing and purchasing recycled content paper, reducing desktop printers, purchasing e-peat electronics when we purchase new electronics, and purchasing Energy Star appliances. So recycling is one of the most common eco-friendly practices that people do. There are many items that we can recycle, and here at UIC, we do a pretty good job of recycling what we can. Materials like glass, metal, and paper are relatively cheap to recycle and benefit the circular economy. Glass and metal are costly to source, but can be recycled cheaply and continuously without degrading their material properties. Plastic, on the other hand, is cheap to source from fossil fuels, but expensive to recycle. In our climate action implementation plan, we had a goal to reach 50% landfill diversion by 2020. And as you can see, we got really close. In 2020, we were hovering around 48%. But we are not on pace to meet our goals. You can see we have not been able to get over the 50% threshold. And this year we're supposed to be at 54% landfill diversion. So can we recycle our way to zero waste? No. In 2018, the recycling market changed when China stopped accepting our plastic recycling, forcing the US to look elsewhere for plastic recycling markets. Those markets in the developing world were not prepared for the volume of material, forcing us to confront our plastic problem here. Plastic is a petroleum product, but is not homogeneous. It's not just one material. A plastic bag is a different type of plastic and has different material properties from a rigid Tide detergent container. With thousands of different types of plastic in the marketplace, all designed and manufactured with different properties, additives, and chemical makeups, plastic recycling is enormously expensive, labor intensive, and very costly, which is a turnoff for companies who could otherwise do it. Because of this, and despite our best efforts, nationally, only 5 to 6% of plastic that is made is actually recycled. 85% is landfilled, and 9% is just burned. Each time plastic is successfully recycled, the polymer chains that make it up get shorter and shorter, becoming a lower and lower quality plastic until it can only become a park bench or landfill material. So it has become apparent that we cannot recycle our way out of our waste problem. In 2019, we did a campus-wide waste audit to provide new data for UIC's waste management plan, which is required. We sampled academic, administrative, lab, multi-use, and on-the-go spaces. The data informed our 2020 materials management plan. We found that 75% of what we are putting in the trash, not the recycling, what we're putting in the trash is actually recyclable, compostable, or just altogether avoidable. So what does that mean for us? The landfill waste reduction policy aims to address our waste through source reduction, materials reuse, recycling, food recovery, and composting. It is the responsibility of every member of the campus community to support these efforts and protect our environment to minimize unnecessary resource use. So again, looking at our 5 key purchasing areas, what you buy and how you buy it says a lot about who you are. We have the ability to use our university purchasing power to make an impact in meeting our zero waste goals, while also saving the university money. Demonstrating our commitment to the people we serve and being good members of our community. So let's start with water. The new policy states, use potable tap water for all events where it is available and its use is not too costly, rather than purchasing bottled water. So there are a few reasons to avoid bottled water. First is it just flat out costs more. Privatization of water is also a social justice issue. Bottled water is privatized water. Much of our domestic bottled water comes from California, a state that has been experiencing increasingly more severe droughts. California is the only Western state without groundwater regulation, meaning if you drill down and find water in California, it is all yours. UIC is a Pepsi campus, meaning we are getting our artisan Aquafina water from those little triangles you see on the map, on that drop map. So at your next event, instead of purchasing bottled water, consider using tap water. Chartwell's, our catering partners on campus, can provide refreshing fruit-infused water along with compostable cups, meaning we are getting delicious Great Lakes water without any plastic. For everyday use, you can opt for a refill water station. If your building or department is not serviced by one of these filtered water refill stations, please let me know and we can seek funding to get one installed near you. You can find the locations of all the refill stations on campus on the campus map under top destinations. The new policy also requires we purchase printer paper made with a minimum of 30% post-consumer recycled material, reducing paper use by electronic processes and double-sided printing. Paper made of recycled content performs equal to paper made from virgin wood. As your department realizes savings from reduced printing, I encourage you to purchase paper made of 50% or even 100% recycled content. You can find it in iBuy by choosing the green or recycled search filters seen on the left. Desktop printers are an area where financial savings can be realized and have an environmental co-benefit. UIC's fleet is highly complex, with over 1,500 printers and about 370 unique models, and an estimated operating cost of about $1 million. The hard costs, such as the printers, maintenance, and supplies, toner, ink, and paper, comprise only 10 to 15% of the cost of office printing. 85 to 90% of the costs come from storage, burden on IT support, procurement, recycling, and/or shredding of no longer needed paper, power consumption, and waste. UIC's information technology doesn't maintain a count of printers outside of the WIPA system, so each respective department is responsible for their printers and maintenance. Reducing desktop printers and moving to centralized printing has the potential to save 30 to 50%. Here's a sample analysis of one department at Indiana University using data from Pharos Beacon, a print software program. Here you can see that a printer consolidation of 83% would lead to 54% annual cost savings. Looking at electronics, the Electronic Product Environmental Assessment Tool, EPEAT, is a global eco-label for the IT sector. EPEAT helps purchasers, manufacturers, resellers, and others buy and sell environmentally preferable electronic products. EPEAT registered products must meet environmental performance criteria that addresses material selection, supply chain greenhouse gas emission reduction, design for circularity and product longevity, energy conservation, end-of-life management, and corporate performance.
Liz, we're running just a little bit over.
Oh gosh, I'm so sorry.
I know people will jump to their 3 o'clock. So if you want,
I'll blitz the rest of it.
Thank
All right,
you.
so why buy EPEAT? It saves the university money. It reduces the environmental and public health impacts of IT manufacturing, use and disposal, and it uses the purchasing power of the university to drive positive change in the global marketplace. Looking at our appliances when purchasing, please buy Energy Star. Energy Star was established in 1992. It is an EPA-backed program that identifies products and appliances meeting certain energy and efficiency standards. Energy savings must be below federal standards and varies by product. And though they have a higher upfront cost, the energy savings translates to financial savings over the lifetime of the appliance. And here are a few examples. All right, last slide. So again, 5 key areas where purchasing can make an impact if we do it. Utilize our filtered Great Lakes water instead of bottled water, reduce paper printing and purchase recycled content paper, reduce desktop printers, purchase EPEAT electronics, and purchase Energy Star appliances. So all these strategies have financial savings while also reducing our emissions and our waste, thus helping UIC. So that is all I have for you today. There are no time for questions, but if you have them, you can email me at recycling@uic.edu.
All right, thank you, Liz. I don't know if we did it on purpose, but that was a great presentation to end the day on and end the year on. I guess we're ending the year on that one. I think that's a universal cause, so thank you. I'd like to thank all of our presenters today. There was a wealth of information presented at a fast pace. Thank you for your generosity with your time and knowledge. And I'm not sure everyone felt the behind the scenes teamwork and making everything happen, but there was a lot going on today. So thank you to all the presenters again. Thank you to all the participants for coming today. We appreciate you're all busy. We appreciate you taking the time out of your schedules and hope that you found the information useful. As a reminder, you'll receive a link to the recorded presentation, a copy of the PowerPoint. This is the final meeting of the 2021-2022 academic year. Watch for an email with the upcoming 2022-2023 dates in the coming weeks. And I hope everyone has a great summer. Enjoy your summer vacation, enjoy the weather, and we will catch up with everyone in the fall. Have a great summer. Bye.